Welcome back to the Everything Property Podcast. Today we have a very special guest. She's a Woman in Leadership Award winner. She's been voted as one of the top 100 women in construction. She's a mother, a mentor. She's got a project awards list longer than my arm for the developments her and her partner Ben have completed over the past 2 decades. Marie Doyle, welcome to the Everything Property Podcast. How are you?
Excellent. Thank you for having me. I'm very excited to be here, David.
Good to have you on. I think what's really exciting about yourself, your story with Ben is always kind of look at those people they've been able to sort of make that transition from smaller projects, into class 2 apartment buildings, all that kind of stuff. I always get a lot of people that kind of ask me personally how they can become developers and how that story unfolds. And what I've been guilty sometimes, a few times on this podcast, is interviewing guests that are at sort of the end stage and all that kind of stuff, but not breaking down the transition between maybe property investors, people that are starting out. I know you guys started out with a lot of alts and ads and that kind of stuff. So I'm keen to hear how you go from alterations and additions in apartments that you're living in to, the tens of millions of dollars worth of luxury property, Calista and Cronulla, for example. How do we piece the two together? So take me back to maybe first couple of projects or how did you guys decide that it was development that you were going to pick?
Yeah, absolutely. So it has been quite a journey. And to be honest, I bought my first property when I was 21. So all the way back then in Queensland, it was a block of land and I worked with a builder and built my first Queenslander house on that. So, and actually interestingly, as part of this podcast, I went online to see what the value of that would be. And when I bought that property back then, it was $385,000 for the land. It was like a $360,000 build. And yesterday when I looked online and looked up the property in Gordon Park, it was 2.3 million. So wow. I look at it now and I go,
You still got it or not?
No. Okay, I sold it in 2006. So, but it's interesting because I think property is always, it's interesting to look back and look at what property can be. And today, sharing our story here about where we've come from and what that looks like now, I think is an important part of the process to really see that. So we did start in alterations and additions. And when I met Ben and moved to Sydney, he had already done several apartment buildings before then. We started Fiducia in 2004, which is our development company. So we're 21 years old now. And, the first sorts of projects we did were alterations and additions on the old sort of red and yellow brick buildings throughout Sydney. So we would go out and buy a block of apartments. And usually back then it was on, a low doc loan. We'd get 2 in Ben's name, 3 in my name. You'd piece it together and we'd, quite often live in some of those apartments. I remember being pregnant, rolling walls till 2 in the morning. I actually went into labour with one of our kids in the apartment and the builder was
blocking the driveway.
Yeah, blocking the driveway. So, it's a really interesting time, alterations and additions. But I think the ethos of what we have always done is always to add value. So the underlying process of development for us is like taking something, adding value to it through renovation, subdivision, an option, and a DA approval, a CDC, whatever that is to get to an outcome. So, the first few years or first probably 6 or 7 years, we're really, doing those renovations and adding value, stratering those apartments and selling them down. So that really worked quite well during that period of time. And we had a lot of success doing that. I think where we then leapfrogged across was we then started selling renovated apartments off the plan. So then we were working with CBRE and we were working with all of these people and we were building a brand around what we did. And this was really unique for a lot of people because they hadn't seen alterations and additions done to the level that we were doing it at in apartments. So we then started doing alterations and additions to apartment buildings where we were buying blocks that were on bigger parts of land and building new build on the back. So as an example, in Drummoyne, we bought an old block of 4 apartments. We changed that into 11, including 4 brand new townhouses out the back with basement car parking. So all of a sudden we were stepping into a space of new build and new build construction, and that started to attract investors and that started to attract financial money that was outside of what we were just doing. And people could see that there was value in that long term. And that is was really what catapulted us into then building new build. And we went on to have built a lot of new build apartments now, ground up construction.
So it's rolling and rolling. But to break it down, because the hardest part is obviously those first couple of acquisitions and purchases, right?
Absolutely.
And I think 20 years ago, obviously, the price of what you're buying apartment buildings for,
it worked.
If you remember any of those, it's probably working. It's probably sickening to learn
it's
what
stacked.
they were.
Yeah.
But how did you generate that first capital base? So do you have resi investments you sold out, or like
100%?
Was it Ben, or how did that first sort of pool of cash become available?
Yeah.
First part of the question. Then the second part is just like to get my head around how much money, like what is it like that block of 4 worth? I know it's 20 years ago, so it's obviously a lot of time, but like give us ballpark figures of what's that cost.
Of course. So that block of 4 we were talking about that we put apartments on the back of. So we bought that at auction, and we never buy properties at auction. It's actually to this day the only development we've ever bought at auction. And actually it passed in and we bought it afterwards. But anyway, so we bought that for 2.5 mil, and it was a block of 4 in Drummoyne in Wrights Road. We still retain one of the apartments in there. And that was part of our strategy back then, was to actually hold 1 or 2 apartments in every building we did. And what that did was it allowed us to build a rent roll, and we then sold that rent roll. So, that's another strategy, again, leveraging your own assets to build a rent roll, then sell that asset. So, we did things like that to build cash flow. But that particular project in Drummoyne, like today, the face value on that, I mean, we sold all those apartments, and I think the net revenue on it was 11 mil at the time. Yeah. It's probably double that now. And I think that's the interesting part about development. But development for us has always been that sort of process of, we've always traded development. So we haven't always held developments. There are people out there, particularly people that are getting started, that will hold it. But for most developers, we're trading stock. So development's about cash flow, and it's about margins. So to your point, the first pool of cash came from doing a successful project to help us roll into the next and into the next. When we started to do new build construction, though, is when we started to need additional equity or additional input to be able to leverage the bank's money to be able to get these construction loans off the ground. Because moving from renovation of sort of a couple of $100,000 on each apartment to then going, we're in a new build space now, now we need commercial finance. So it's a different methodology to what renovation was. And of course, now what we do in the ground up construction space, it's all about the finance piece.
If Marie Doyle was starting in 2025, obviously, with knowing what you know now, what advice, or how would you start to do, like, to get to where you are now? If you were starting again from today, how would you do it?
Such an interesting question, because I think part of our journey has contributed to where we are.
Yeah.
I think and I might start with what the biggest challenge is, and this is probably something that most people face, and it's something that I've seen time and time again, is that people come to me and they go, I've done the feasibility, it doesn't work. I've looked at 1,000 sites, it doesn't work. And I go, well, show me the feasibility. And so they'll show me the feasibility, and I go, this says it's 19%. Wouldn't you be happy with 19%? And they go, well, it's not that. And I said, well, what's the issue? And he goes, well, I don't have 1.8 million. And I said, so this is not an issue of you not having a feasibility that stacks. It's an issue that you don't know how to fund it. So finance is a function of feasibility. And if people can get that right, I think it unlocks so much potential. But most people are stuck in this idea, and that's, small scale developers, it's owner builders, it's investors, or, people wanting to get into the property space. They've got this mindset or limited thinking around that because they don't have their money to put into that project. Therefore, they can't take the next step. And I think it's such a defining moment for people when they realise that, oh my God, there's options and there's alternatives to lending and finance function within doing a development. Because, okay, let's think about this. If your development feasibility is 19% and you need to give some of that away in order to do the project, and you end up with a 15% return, is that still a project that you would do? And I think that's what most people don't understand. So if I was starting again, I would look at projects differently. I would look at projects with the intention of probably partnering with people to be able to unlock value that previously I probably wouldn't have been able to do had I had limited funds to start with.
Yeah, okay.
Yeah.
Perfect. Well, I always say that to people too, because people ask me all the time, like on socials when I do my question boxes and that, how do they get started? And I say you either have sort of capital, skill set, the site, or all three. And if you've got one of those, you can get started. 100%. You just need to find, how would you find the people to contribute the funds for that? If you're starting out, clean slate, you found a site, you've went out there, how would you go about today and age, finding those people to contribute? You know, it could be a couple 100,000, could be a couple million to those sites.
Well, money's everywhere, right? So there's so much of it. And I think it's just about how you package that deal up, because again, you just said if you have a site or you have a deal, I think that's the first part. So let's say you've got a piece of land and you've got a builder. Your first, quickest, easiest way would either be to partner with the landowner through some form of JV or option deal, where you've got some sort of vendor finance. That's probably the first path. The second path would be, if you've got a builder, how can you work with that builder to perhaps have them put some funds in? Those are probably your first two places I would start if I was starting on a small boutique res. The next piece is to then go to commercial finance and go, how can we leverage the deal based on what the end GRV is? How do we work backwards on a commercial deal to see what that looks like, and how much money do I actually need? And could this be done through a second mortgage, or could this be done through a mezz piece or a private lender or a high net worth individual that you know, or your parents or anyone, right?
Yep.
I think once you understand what you're looking for, it becomes a lot clearer and a lot easier for people to actually go, oh, well, actually, I could see myself doing this, and I know somebody who would want to do this with me. But I think people start at the other end going, I don't know who to do this with, rather than breaking the project down and actually getting into the final detail or the finite detail of it and going, actually, this is how much I need. Actually, I only need 300 grand. Actually, I could go to this person and ask them for that, and they'd be more than happy to be a part of it. I think there's so many options out there. Most people don't understand finance and structuring, particularly in these projects.
Yeah.
And if you think about even just a dual lock or a small townhouse site, people are not in that thinking yet. They're not thinking like developers. They're thinking like they need to just go like they would traditionally, oh, I can't service it with my bank. My bank's not going to give me this money, you know, and they're so stuck in this.
There's a couple of other options.
In this mindset of that's where it needs to be, when it truly isn't. There's so much potential, and, you know, there's an unlimited amount of money out there if you've got the right deals. Yeah,
fair enough. You just got to go find it.
Yep.
So transition was alterations and additions.
Yep.
And then you guys are looking at bigger blocks where you can potentially do the alts and adds and add on anything.
Yep.
Is there any projects in those moments that stand out for you in terms of huge success or big lessons learned?
Yeah. I think there's always lessons learned.
Yeah, I mean, every project.
And we actually do lessons learned at the end of every project. Like, it's good practice to just go, okay, where could we have tightened up that timeline? How could we have been better on, you know, resourcing that particular part of the build? How could we have used different materiality? How could we have, you know, on and on and on and on. How could we have, you know, partnered with different funders, whatever that looks like? How could we have structured the deal better? You know, we've structured some horrible deals in the past where we've, you know, at the time thinking that was the right thing to do, and halfway through, you know, trying to pay people out of those deals to get them out. They're all lessons learnt along the way on so many different projects. You know, I think there's no one project that's the same. And whilst our brand Fiducia and what we've done probably for the last 10 or 12 years solid is, you know, we follow a set of steps and procedures every time we do a project. So, you know, the lessons learned are becoming less and less painful along the way, to the point where now, you know, we can successfully turn a project over without too many problems.
Yeah, that's very true. But is there any projects that, you know, financially that were either that hurt you learn a lot from that you can sort of run through, or any on that positive side just around that space? Because I know we're going to the apartment space sort of after and talk about that transition, but I even see it now, there's huge potential with those red brick unit blocks, because they'll build on very large blocks of land, quite spacious internally too, sunrooms, all that kind of stuff. So conversions from like 1 to 2, 2 to 3, and then the additional ones on the back of that is very doable, and there's a lot of opportunities there, because I mean, most Sydney suburbs are filled with them, right?
100%.
But how did you guys go, and what are some of those key standout projects?
Yeah, look, in the renovation space.
Yeah.
So in the renovation space, one of the big ones we did was in Woolloomooloo, and that was sort of in behind the wharf there in Melcombe Street. And I remember we bought, it was 36 apartments and townhouses right in that little spot in there, and this was a renovation project. And we did something quite ballsy then. We launched it as an off-the-plan renovation apartment building, and we held this huge networking morning breakfast with all the financial planners, all the people that used to sell stock through their investor networks and things, all the real estate agents at the Art Gallery of New South Wales. So we held this great big breakfast, and
just down the road,
you could overlook the project, right? So you could see it. So what we did was, we had this whole project set, and it hadn't been renovated at the time. We walked everyone down and we'd sold the dream and said, this is what we're doing. You know, you can get in now, you can buy it, and we're going to sell you a renovation pack and an external works upgrade. And then by the end of it, in 6 months' time, we're going to hand you over a renovated apartment that you can then move into, sell, rent out. So we did this back then, and this was in 2007. So 2007, and we did this then, and then we walked everyone down to this place, and we walked them through, and we literally went sold. We were putting stickers on all of them, and then we'd walk them up into one apartment that we'd renovated with Freedom furniture back then, and like the kitchen was high white gloss and mirrored splashbacks, and back then that was amazing. We even had a wallpapered wall in there, like that was cutting edge back then.
I'll let you get away with it.
It was cutting edge back then. Yeah. But the apartments were amazing. So people then walked into this, this display suite and could see what was possible for their apartment. And so we literally sold out that whole entire building within like the first week of launching it. People now, then moved in afterwards or settled their apartments, and they realised the uplift in the value. And so they went from being, a $650,000 apartment that they'd bought off the plan, or renovation off the plan, they'd paid for their renovation on top of it. But when they came to settle, it might have been worth $800,000. So a lot of those investors got the uplift that we didn't get, but we were obviously making our margin in between, but facilitating this. So we used to do interesting things like that back then in the renovation space, which were, cutting edge back then. Cutting edge back then. But now, we tell that story. It's just not possible to do that anymore. And I think, there's, to your point about red brick buildings and apartment buildings that are out there and available, I think there's some good in there. I think there's some cream in those apartment buildings. They're amazing structures, and most of the time they're in excellent locations because they were built so long ago. And, we're in the middle of some of the biggest planning changes since the 70s right now. And those apartment buildings that were built back then were part of, a pattern book process that used to happen back then. We're seeing a revisitation of that same type of thing re-emerging in the Sydney market. And, either those buildings are going to be knocked down and replaced with newer ones, or, there's an opportunity to refurbish. And it works in some areas to do the refurbishment model still. In others, it just doesn't.
Yeah, and it just depends on sort of fire and stuff now, right?
Absolutely.
Are you buying and settling on that site and then doing the reno, or is there something clever with the option on that?
We had an option over that, so we were doing simultaneous settlements on that.
Okay, and you were able to get in for early works and renovations?
Yeah, so we basically, the way we did that, So we basically worked with a partner on that finance piece at the time, which is really interesting. He's a partner that has actually bought into other projects of ours down the track, but the guy who actually owned it at the time Andrew Banks was actually my former employer. So he hired me when I worked at Morgan & Banks when I was like 20. And I was like, I've just bought your building off you. It was like a full circle. And then I ran into him at a Grant Cardone event about 2 years ago. And I went up to him and I said, you hired me at my first role in corporate when I worked in IT recruitment at Morgan & Banks. I said, and then I bought your building off you and now we're here together. And it was just like such a cool full circle moment.
That is wild. I want to ask as well, because that's an interesting strategy, and potentially it opens doors for people that don't have, I don't know what 32 odd apartments or townhouses cost back then. But let me ask, is there any other structures that you've done like that where you've got early access, or you've just been able to sort of delay putting that money down up the front? Is there any that come to mind there?
Yeah, absolutely. Look, I mean, we use options all the time. We've just bought a site in Mossman under option, part of the new low mid-rise, and, we'll run that out over an 18-month option. We'll get an approval. We'll add value to the process through that DA approval process. Options are a big part of what we do, and most sites we buy under option, just because it gives us the ability to add that value over time. It also gives us the control during that time as well to be able to amalgamate sites if we need to.
Yep. Run people through that, because we've covered it. We have covered it with the conveyancer, and we've touched a little bit on that. We've had a few developers that have talked about it here and there, but I want to get your sort of explanation on if someone hasn't been as far back as those sorts of pre-100 episodes. I think they were 80s or 90s that we did that.
Yeah.
But for you, if you can give someone like a quick overview of that, how you run that process and how that works, just so they can understand what an option is.
Absolutely. So essentially, 101, an option is basically getting control over a property or a site where you don't own it, but you have control over what you can do with it. And so somebody is giving you the option to be able to add value to that site without you owning it. So for a small fee. So, you might pay 1% to 2%, maybe up to 3% in this market called an option fee, and you would put that down as a percentage of the purchase price, and usually release that to the vendor to be able to have access to that property during an option period of time. So that could be, anywhere between 12 months, 18 months, 3 years, depending on the size of the site.
Yep.
And then during that time, you're granted access with the vendor's consent to be able to then lodge applications to council, make CDC applications, make inquiries, basically put together a DA, so that when you come to the end of the option period, you've added the value during that time without owning the site, without paying any interest on that site. You get to the end of it and you then have to nominate. So then what happens is you can either sell that, nominate that to an external party and sell that property to another developer with the value added, or you can nominate yourself and execute that option and basically move forward with the development. So then you're settling on a site at that point in time, because you haven't settled. Your only money that you've put in is for the DA and the small option fee.
Yep.
You're then settling on that site with value added. So you're now, let's say you bought the site, for argument's sake, for $5 million, right? So you've gone and you've bought a development site, you've optioned it up, you get to the end of the option period, you've added a DA. Well, that site's now not worth $5 million anymore. That site is now worth whatever the end gross revenue is. Mm-hmm. And then you can settle on commercial finance terms on the end value of what the gross value of that is, and move straight into a construction facility or a development finance facility. Mm-hmm. So the amount of equity you need, and this is the benefit of options, is the amount of equity that you need if you do have an option period is a lot less than what most people think, because you're using the uplift in value to be able to unlock the potential of finance based on what the end result is.
Yeah.
So that's probably the best explanation of option.
That's good. That's perfect.
Yeah, and we use it a lot. We use it a lot when we're also trying to amalgamate sites. So we might, perfect example, a site in Northbridge that we did on Eastern Valley Way, Grace Apartments, 33 apartments. We had one California bungalow on one side, another one on the other side. We entered into an option with one guy. The other guy didn't want to sell, so we sort of were working in the background. Then we got the second one under option, and we had a site. Our site in Neutral Bay, Harriet Street, we had one house that we'd put under option. We then went to council with it. He said, you can't leave an isolated site next door, so you need to get the site next door. So we went, okay, well, we're going to option up the next one next door, but that was a semi, so then it took a little bit of time to get the next one, so then we ended up with 3 in a row under option. But then under that option period, we were able to move forward, get a DA, and then by the time we settled, we had the uplift in the value. So
talk to me, the Californian bungalow in Northbridge.
Yes.
You said you'd secured one option.
Yep.
So you obviously talk to me through the discussion with sort of the vendors for the site and to secure it, the first one.
Yep.
And then how do you come around in terms of, because I guess you're a little bit exposed in the sense that, you know, you go to the next door neighbour and you go, look, we've optioned up next door, this is what we plan on doing.
Yeah. You
need them, they know that they need you sometimes. Yeah. And I've had it in projects around Bondi, for example, where these homeowners, they know that they get a taste of it, and they just put these outrageous numbers on what they want, makes the deal sort of unfeasible. Yeah. So how have you went around addressing that discussion? Because it's obviously, if you don't get him, project doesn't go ahead, but you've got to buy it for a number that makes sense. Yep. How do you go about that conversation?
So Northbridge, as an example, was a standalone site, so we actually didn't need the other site to move forward in Northbridge particularly. I'll tell you the story about how the option came about, because this is the benefit of always talking to everyone, right? So we actually were doing a renovation of 4 commercial suites and changing it into resi just up the road in Lane Cove at the time. And we actually needed access for plumbing underneath into a car parking space to run a pipe. Yeah. Anyway, that car parking space belonged to somebody else in the strata building next door, and he was a person who owned that car parking space. So we went and met with that guy and said, look, we need to get access in here. You know, we're willing to pay you if we need to. And he said, look, come and talk to me. We're like, okay, we'll come and talk to you guys. I'll let you do it if you build me a new kitchen in my apartment. And we said, fine, new kitchen. What's that? 15 grand. Yeah, easy, done. He goes, and I want a new microwave. Done. And he goes, but I want you to come back next week and talk to me about something else. And Ben and I are like, what does he want us to talk to you about? Okay. So we come back and he pulls out this survey plan. I said, on this, older guy, probably in his like late 60s, pulls out this survey plan. He goes, I own this house on Eastern Valley Way here on 1,600 square metres. He goes, I think it's just been rezoned to high density. And I went, Ben and I are like, yes, this is amazing. Shit. And he goes, would you guys be interested in buying this? And we're like, let's have a look at it. We'll run the numbers. We'll go away. And okay, thank you. We go away. We quickly run the fees over. We're like, yep, this is amazing. Off-market transaction. Let's do it. So good. Bring the lawyers, get it done. Yeah. And so that's how we actually got access to that first block of land. Now, we had that block of land and we did not tell the neighbouring property that we obviously had that one at the time. Okay. And so it was a bit of a risk to go in with just that one property, knowing that it worked and we could probably do townhouses on it. But the benefit of the zoning was R4, so they wanted high density in that area in Willoughby Council. Yep. They also wanted a portion of affordable housing under their new mandates at the time. So it made sense for us to try and get the one next door. And so we worked behind the scenes to get the other one and ended up with both.
So the second guy didn't originally want to sell?
He didn't originally. Yep. We eventually talked him into it and he did, yeah.
Okay. So is there much above is there much above market value in those sorts of deals that you're offering then? Or?
I think there were back then. Yep. It wasn't significant, but people knew.
What are we talking like percentage-wise?
When we bought the site, we bought it for... It was 7 mil when we bought the site, so like 3.5. Okay. And back then a California bungalow was probably worth maybe 2. It was pretty run down and dilapidated, but it was a big block of land. The other guy we bought it off actually had a lot of storage stuff in the back of it, including like old what would you call it, like containers and things like that. So I think it was harder for him to sort of get his head around that process. But, it wasn't a lot. If you think about now, you'd not be able to buy that block of land for the same price. I think it was 7.5 at the time. It was a good deal.
Wow.
Yeah.
That's
the cups of teas, right? That's the relationship. The people say property's about people.
Yeah.
It's all about people. It's all about the relationships. It's all about those conversations. And, most of our deals are done off market. Most of them are raw sites that we put together, through that process and under option.
Real estate agents, or are you going out there yourself?
Yeah, absolutely. Look, we definitely deal with real estate agents, and we work in a transaction capacity, giving advisory to other real estate agents at the moment, putting sites together, particularly with all the low mid-rise planning changes. There's a lot of work in that space, and we work quite heavily with local agency in the Upper North Shore here in Sydney to put together those development sites, because a lot of them are, ma and pas that might, live in a single dwelling property that have lived there for 30 or 40 years and have no idea what it means to sell to a developer, and no idea whether they're actually getting the maximum price that they should be getting. And so our role is to work with the real estate agents to educate them to say, well, let's put these two properties together, and what does this look like in a feasibility, and what can these people realistically expect, for their end sale price.
Are you running fees in Excel or Estate Master?
We don't use Estate Master. That's too much for me.
Wow. Okay. Yeah. Fair.
I actually love an Excel spreadsheet, so I'm an Excel nerd.
You're doing those fees in Excel.
We've got pretty robust models that we run in Excel. We also use Dev Fees, which is another form of feasibility software, which we use primarily for reporting and things like that. Our Excel models have been around for a long time, and we've progressively grown those models so we can produce full cash flow reports. Everything's tied, the sensitivities. But for the purpose of what we're doing for quick analysis and providing high-level feasibility, it's all about the data input. I think it's less about the methodology, and I think people get their head stuck in it needs to be, Estate Master.
Yeah.
I disagree. It's only a feasibility is only as good as your inputs, right? And it's about understanding what the margins are, what the percentages are for consultant costs, how that changes, what the end sales values are, which is really important, particularly in what we're about to see unfold in New South Wales. So the supply and demand is changing so much. What does that look like in 3 years' time when you've got all this new stock coming on the market? How do you look at that, and how do you price that up? And I think that's the experience and knowledge that we come with, that we're putting into those feasibilities. So I think the feasibility is only as good as the input.
The inputs, yeah, definitely. One question I have for you is, when do you guys start doing apartments? So talking about that in early maybe 2010s and stuff.
Yep.
But when's the transition into full new blocks, your own sorts of resi apartments? Yeah,
so that came pretty much after the Woolloomooloo project. We started really moving into that new space because we had access to probably more commercial money then. It was sort of an introduction into that finance world. We had finance partners back then, very commercial money that backed us for about 7 years into these projects. And that was an incredible relationship that we had for that period of time, where we could literally have a cup of tea down on site, and they were more than happy to proceed with it based on the feasibility in the site, on a Saturday afternoon, go, yep, let's do it. So we had that access to capital, which really gave us that momentum to be able to build our pipeline, and our brand as well. Like, we really put a lot of time and effort into our brand and making sure that the process and what it looked like in the marketing and the vision that we were putting together, and selling off the plan is a very different process, and that comes with building a lot of trust in this market, particularly if you want a good reputation on delivery. And so that's a whole nother kettle of fish when you start playing in apartment space, because you're dealing with not just delivering product, you're dealing with clients now. And how do you deliver something that you promise on, and does it look like the renders, and is it going to be there on time, and is it going to hold its value over that period of time during construction, and is the developer going to make it? It's all these questions. So for us, we spent a lot of time building out that brand piece and making sure that we had the trust and confidence of all of our buyers to be able to build Fiducia into that next level. And, you know, I think we pride ourselves on that. We deliver really quality buildings and, you know, we've done a great job with that. Part of that process and the first sort of projects we worked in, one of the first projects we actually bought in that apartment space was actually a DA approved site. Oof. And controversial, I know. And we sort of looked at it and went, this is a really interesting site. But the reason we bought it DA approved was, firstly, they were trying to move it quite quickly. It was off market, so we were like, yep, sounds great. We saw the opportunity to put a design element over it and bring our brand to it, which was where we saw the add value piece in this. So this is a pretty iconic building, and we actually won Apartment Complex of the Year for it with the UDIA back then. And it's the project's called Sea Clovelly, and it's opposite the Clovelly Hotel, and it's 3 apartments with a big curve on the front.
And the sky aperture.
And the top one. Absolutely. Yep. So back then it was a really... And the reason we did it is it was a cutting edge design. It was an iconic site, and we knew we would get the end values above and beyond what, you know, was currently probably forecast. And so we actually partnered with Coco Republic on that, and we did something that a lot of people in the market weren't doing at the time, is we built 3D renders to sell them off the plan, but we had Coco Republic's furniture modelled into every single thing, and we had them redo the whole interiors and the package. And I remember, because renders used to be so expensive back then, like some of those renders were like $6 or $7 grand, and we're modelling up pieces of furniture from Coco Republic to put them in, and it was. But that's what sold those apartments, right? So we had this process and we sold those apartments. Those apartments obviously some of them have resold. One of them resold. I think we sold the penthouse for $4.5 million. It's resold for over $7 million recently.
Still.
Yeah, yes and no.
Yeah.
But, you know, that was a DA approved site, but that also made us a 64% return on that project. It was a massive return because we bought the project really well. We didn't have the risk of the DA, so time value of money was really, really lean. We pretty much rolled straight into a construction certificate. We had a builder at the time who had come off some townhouses, and this was one of his first class 2 projects, maybe not, maybe second or third class 2 projects, but he hadn't done anything like this. Now he's a very, very successful class 2 and private residence builder in the eastern suburbs now. So we literally set him on his path.
Can you shout him out?
Yeah, J-Corp, Jason Natoli. Excellent operator. And, you know, we've worked with Jason on a number of projects since then. But that was one of his first sort of projects, you know, working together with him. And, you know, and I love seeing those stories of building other builders up along the way. You know, he won't do our projects now. He's too expensive.
Perfect. But, there was no value add in terms of additional level, floor space or anything like that?
We just delivered a project and delivered it well. So we delivered it.
But why were they selling that project?
Well, I think for us it was understanding that there was more value in the end sales, whereas I think most people couldn't see what we could see. And I think we put in, you know, the best landscape designers. We put in Wire & Co. We put in Coco Republic. We built the team and the brand around it. We called it Sea Clovelly. We had amazing brochures done up. Like, that's the add value in a lot of the times. You know, you go from just seeing plans on paper to bringing the vision to life, and people pay for that.
That's true.
Yep.
Yeah, I mean, we've had the Grey Boys on as well. And you know, a lot of their success comes from their online marketing campaigns,
100%.
Renders, videos, all that kind of stuff.
Yeah, you're selling the dream.
So that was one of the first ones, and that was what, 4 apartments?
3 apartments. Yep.
Basement garage.
Yes.
Wow. And now you're up to like your Callistas and whatever the ones in Mossman are at the moment.
Yeah.
But what are what I'm interested for any apartment developer, there's 2 things I'm really interested to hear. One was the COVID, I suppose, how would you say, the navigation of the COVID period. I would have used
a different word, but...
Yeah. But how was that for you guys?
Yeah, look, we were building Neutral Bay through COVID. So Harriet Street project, 10 luxury apartments looking back towards the city. You know, that's like a $38 million GR on that. And we were, you know, smack bang in the middle of construction. So we were out of ground and we were at weren't quite at lock-up stage. So, you know, we faced what a lot of other people faced in Sydney particularly was, you know, complete lockout, but construction was allowed to sort of move forward for a period of time. We were fortunate enough in that we had builders that were, you know, pretty organised and well advanced in terms of materials ordering and things. So most of our stuff was here in Australia. So we didn't have the lack of, you know, material shortages or any of those issues, which was positive. But building through the period of COVID, it was just a delay in time. So I think we ended up having probably about a 5-month delay. And on a project of a 5-month delay, you know, when you're at peak debt at the end of that project, it hurts. Like, and I think, you know, financially, when we went to settle the last apartment, you know, there was an interest component that we had to top up. So, you know, that, and we made it out without obviously losing capital and things, but we also had to top up that interest payment right at the end. But we delivered an excellent project, you know, and very happy owners in that apartment building. But, you know, that was a factor of COVID. There are people a lot worse off than what we experienced during that time. But Class 2 is risky anyway. I think, you know, COVID certainly didn't help it. And there was a lot of things that I think in particular development companies all around Australia, you know, it became apparent where there was, you know, gaps within their processes or gaps within their businesses. And we saw a lot of companies go under during that time.
We did, and builders too.
And builders, yeah.
How have you guys went? Because where I've seen a lot of success and actually the developers that I've worked for have been developer builders.
Yeah.
But you guys are strictly developers, and then you bring on a builder. How have you found that difficulty? Because obviously the builders then got a price and put a margin on that and a risk fee potentially. How have you went around making projects work? Because obviously you guys got to make a margin, builders got to make a margin. If it's all in-house, there's a little bit more squeezing that we can do. But how have you went now with trying to juggle that?
Look, we've always just, and it's funny actually, Ben just said to me the other day, he's like, oh, maybe I should get my builder's license. And I said, oh God, gee. He actually, you know, and he's 52 and he's like thinking, maybe I need to get my builder's license. Never say never though, right? But look, absolutely. And I think, again, that's just a factor of feasibility. We always model that in. We always like to have all of our projects have to be above a 20 to 25% margin on development after all of those costs after interest. Otherwise, we just don't touch the project. We were talking about projects for practice. We don't want to be doing projects for practice. So I actually love working with external builders. I think what it brings to development is flexibility, innovation, the ability to be able to do multiple projects in multiple locations. We've just finished Callista Cronulla with Matt Hall from Developer, who's an excellent builder. He traditionally has only ever built custom homes or his own developments. He's never actually built externally for any other developer. And so we were really fortunate enough through a friendly introduction to be able to get him to come on board. And I think what you're leveraging though is their systems and procedures, their people, their management, and all their in-house team. So whereas for us, I have no desire to run an in-house team and the complications of having all of that on my book every month. So, you know, again, it's like buying a property. You want to be able to leverage those things, you know, as much as you can. Leverage is one of the keys to success in property. So again, you're leveraging money, you're leveraging teams, you're leveraging processes, and using external builders is a great way to leverage that. You know, again, but like I said, never say never.
It's true. It's funny you say that because you're thinking about the builder's perspective. There's a guy, I had a message the other day from someone, and he's a carpenter by trade, wants to get into development, and he was saying to me, I'm thinking about getting my draftees to do a draftsman's course. I said, well, by the time you do that and you think about the money and time and effort it's going to take you, the architect and is unfortunate as it is, but like the amount of money that you pay them to do their thing versus what you get in return and what you can do with your time. I was like, you better just focusing on your carpentry stuff and maybe getting your builder's license and doing that than it is trying to do every single step of it. So it's an interesting perspective that you actually like to work with.
100%. And it's the same with outsourcing most consultants. Like, town planners, architects, designers. Designers are a big thing because every project we do is different. We don't have a cookie cutter design for every single project. There's certainly developers that do that, and I was judging the HIA awards yesterday. There's a very experienced, prominent, successful developer in Sydney who does the same sort of projects, in-house architects, in-house design. They build to a downsizer market. It's a quality product they deliver. It's not revolutionary in their design or innovation, but what they're doing is delivering time and time again what somebody needs. So I like for different projects to have different designers and different architects on board.
Yep.
I think it depends on where we build as well. So we want to be able to deliver something that's a little bit different. Creatives and innovation and that side of things come from different people. We don't have the answers to all of it. I mean, I certainly go into a project with a vision. The new project we've just bought in Mossman, like I've already done the Pinterest board. I'm already on the vision. I'm like, this is what we're delivering.
You've
that's
changed
what
up
we
your
do.
Team across all your
100%.
projects and stuff. So it's really interesting.
Yeah, look, we've worked with the same architects for a number of times. Like we're more than happy to go back to the same architects. But I think architects suit certain projects as well. I also love, working with new people with new creative ideas. We've just worked with Chloe Matters on Callista, and it's one of her first multi-res projects that she's done. She's now gone on to do other multi-res projects. But we really looked at what she was doing in this kind of very pared back, beautiful, materiality and tonal kind of look, which had never been done really in an apartment complex before. And we brought that across into what we were doing in apartments and created a aesthetic for apartments, which, is not something you would normally see in an apartment. And I think there's beauty and benefit in doing that, right? Because you're able to create something that's quite special.
Yeah, that's true. How do you go about finding those guys?
It's like the cup of tea guy. I think there's so many introductions, right? We never go seeking them. I like to believe like everything always happens for a reason. Like you always meet these people, or you see something that you like, or you get an introduction to people. I think there's always a connection of how you meet things, and it's fluid. It never feels forced though either. I think most of the people we've always worked with, we've had a genuine relationship with.
Okay, so if anyone's wanting to get on the books, if you guys just reach out or make a funny coincidence.
Well, actually, it's interesting. The architect that we're using at the moment worked at a previous architect firm that we'd worked with. And, we've been quiet after COVID with our pipeline, just sort of building out, one or two projects. And now we're ramping up again. And it's the people that have stayed in touch and reached out. And he sort of said, came to one of our events. He's been, contacting us, sending us a message. And he said, how about we do? And I said, absolutely, I'll give you a shot on it. No problem. Like, more than happy to. But for me, that's the relationship, right? And that's it's an interesting thing, because I can guarantee you now people will go, oh, they've got new projects in, and I'll get people going, can we do the marketing? Can we do this? And I'm like, yeah, I haven't spoken to you for 4 years, and it's like, I always think that's interesting, right?
Yeah, you can smell that from a while.
I always think that's interesting, because the people that genuinely want to be a part of what you do are always consistently there. Like Ben, my partner, he's got his close mates. He calls those people every day. Like that's just, I think it's the ethos of what we do, right? Like we want to be around and working with people that want to be around and work with us. Yeah,
very fair. Tell me, to date, what's been the best project you guys have delivered in terms of financial returns? I'm a numbers guy. So if anything you can share with me on that perspective would be fantastic. I understand it if you can't, but what's been some of those really good returning projects?
Seaclow Valley is the best returning project. It was excellent. It was for a development, excellent, right? And I think that comes down to two things: time value of money and the low risk of that. We've done other actually there was a great project we did which we never got an execution on, which was Tuggerah. So we bought a really large 16 hectare site up in Tuggerah.
Is plan?
Correct.
Yep.
Up in the Central Coast. So we bought that really well. It was sort of a strange site.
This is just before COVID, right? This is about 5 years ago.
Yeah. We were rolling into COVID. They wanted it sold, so we bought that site for 7.5. They had challenges with the floodplain up there, so we solved that problem, right? So we got all of our architects and engineers and everything, and we solved the planning problem. So what we were able to do was get a subdivision on that site for 6 lots. So, and we had that revalued, and that was then revalued at 13 mil by the time we came to settle it. So great increase, amazing.
Option.
Yep. Oh, just a long dated settlement. Option with a long dated settlement. So we got that. But again, that's solving the problem and adding value, right? Excellent example of that to a subdivision. The greater plan for that, though, was to build a master plan community within a Todd location, so next to the train station, had the ability to have 1,200 apartments, over 40,000 square metres of commercial space, a lagoon, potentially would be a new town centre. We had that gazetted as part of the Central Coast plan. We pushed really hard for it. If you know anything about the Central Coast politically and at a council level, they are failing miserably.
No, like $500 million failed.
So I mean, this was again, we're trying to solve a public sector problem with private equity and private equity answers, and so we've put this. We actually invested probably close to over $1 million in putting in plans, consultation, urban design, working with top marketing brands, building playbooks around it, taking that to, the next level to be able to get this master plan approved. Getting master plan approved. And, by the time we'd submitted all of this and been through the whole process and everything, council are like, we're probably 3 years off trying to make a decision on that. So we actually ended up selling the site.
How can it take 3 years
to make
council to make a decision? It just blows my mind.
And now, I mean, hindsight's a wonderful thing. Had we been able to hold that property and see that through, but again, we are in a space of being transactional, so we needed to obviously move that on. And knowing that we couldn't sit there and hold that for 3 years at that period of time with an unknown outcome, we sold the site for a really,
decent margin.
Yeah, we sold that for 17 mil in the end, so and walked away. But that's 100. It could have been a 100.
Yeah, I mean it's maybe a $7
billion site.
10-year play though.
Huge.
So
yeah. So again, I think swings and merry-go-rounds. There's lots of different projects out there that we've been across, and lots of different things. So is there any one that's done financially well? That one did well. We've had other great success, and Northbridge did well. Most of the projects have done well. Okay. There's not been any that we've gone, it's a total loss.
Nothing total loss, but nothing absolutely bananas. I mean, apart from 64% RSC.
It was excellent.
Yeah. Okay. Perfect. Well, look, Marie, I'm conscious of time. We're almost
there already.
Yeah, we're almost at an hour. So
we could keep going.
Yeah, exactly. Which is the danger when I get someone on. We haven't even spoken about, LMR, CDC, all those kinds of things. Look, probably one of the last things, Maria, I want to talk about before we wrap up is the opportunities around LMR. You guys said that you're working on a few sites in and around that. There's obviously some more things coming out. I've seen some really cool things, especially in say Rose Bay. There's a couple of those sites that are going absolute bananas, but I want to get your thoughts on it, opportunities, and how you see that playing out.
Yeah, absolutely. As I said before, biggest planning changes since the 70s. So it's really, and I won't go into obviously the detail of what it is. We know it's 171 town centres across New South Wales. I think the opportunity is in realising that it doesn't work everywhere. And again, this is a factor of feasibility. I think while most people think that they're sitting on a gold mine, the reality is that, and I'll use this as an example, you might be in a zone which has been R3 and it's been upzoned. This is for obviously developments on larger scale. R3 upzoned to 2.2 to 1. By the time you actually do all the massing and scale and setbacks for ADG and DCP, you might end up with a resultant FSR of maybe 1.86. So, I think there's a methodology in what they're trying to create, and I think it's working very well within the infill areas that have higher gross sales on the back end. We've sort of identified where those areas are and working heavily in those areas. But there are a lot of spaces where we actually need that housing where it's actually not working. And that's in the R2 zones, where even though you can now do multi-dwelling housing and you can do dual occupancies or a low-rise residential flat building, what you're seeing is that the cost of construction still far outweighs what is able to be done. I think there's a bit of a silver lining in that pattern books will actually open up, and I think I can talk about this, will open up the CDC pathway and a fast track under using those particular pattern books on R2 sites. So what that now means is that whereas previously people may have had to take those sites to council and get a DA, you're now going to be able to do that under complying development. So does that de-risk the site, and does that have some value in time cost savings? Absolutely. So does it start to make those sites more feasible? Yes, because you're now working within, the confines of a pattern book and being able to quickly get something on that site and bring it to market. So I think there's definitely value in that. I think that piece hasn't been unlocked yet, but it still comes down to the end sales value. But I do think that's an exciting piece of the puzzle, particularly for investors or small-scale developers or builders that haven't got really the acumen or experience yet to be able to do it. They can lean on a pattern book and go, here's a design that's fully compliant. It's probably got a cost base to it that they can understand and has already been costed by a construction company, and go, I know with a fairly high level of certainty that if I put this on my property, I know what the construction cost is going to be, I know what the output is going to be, I know what the net saleable area is going to be, and then they can then work backwards with some level of, de-risked feasibility and go, okay, I can move forward on that. And so what that will do is that will start to encourage more people to take action on those sites. So I think it's not over. I don't think it's, it's over in that space yet, but I think, previously where we've been running numbers on it going, it just doesn't stack.
Yeah.
Now we're going, well, actually, maybe it does if we look at it a little bit differently.
Yeah, 100%. I think one thing I'd add on to that, and the mistake that a lot of people make is like CDC pathway, like I'm all for it, biggest advocate for it, I absolutely love it. But I see people always go to those cheaper areas. And like you said, with the apartment play, you got to think about it. If it's costing that big developer $550 or $600 a box to build without margin, more out those ways and that type of stock, like in those more affordable ways, then you're just not going to get those. It just won't stack up if you're GR and you can only sell that finished two-bedder for $650 or $600. And that's the same thing for, if we take it a step back, and for the people looking at duplex and townhouse sites where I'm in and working, is that they always try to go for the cheapest sites, but at the end of the day, there's always going to be for like a duplex or for like and like similar to apartments, but apartments with the finishes at ranges heaps, right? But for duplexes and for townhouses, there's always going to be a base price to build that. So if that base price to build at say $350 and all your other fees is going to cost you, $600 all up or something like that, if the finished product in the area is only $600 or $650, you can't make that site work. So you actually need to punch into those more affordable areas. But I mean, that's cost of construction and all that kind of stuff. It's the cost
of construction. They want the affordable housing crisis to be done, but the reality is we're building more high-end homes, which doesn't meet the requirement for the affordable housing. And we could have a whole podcast on this. Actually, I'll hook you up with somebody who you should talk to about that. But I mean, that is a whole piece in itself. And I think, the difference between social housing and affordable housing, there's a gap in that space that's happening right now. And I think, trying to say that the answer to this is affordable housing in these particular areas only where it works is not really, we're much better off probably building, getting the extra FSR, being able to build what we want, and then taking whatever that affordable housing is and making that a contribution that we then give to somebody that can go and build affordable housing and actually deliver it for an affordable price. So I think there's better use of the way that the affordable housing could be done. I think what has happened currently with what we've got on this reform is a pathway and a process and a really good start, because we're unlocking infill areas that previously weren't permissible,
Mm-hmm.
because let's face it, the greenfield stuff is not going to happen in a fast time.
Yep.
I was at a conference the other day for HIA, and you know, the time to bring a greenfield site to market is, if you went out tomorrow and bought, you know, acreage and land, is 10 to 15 years. So infill's the answer right now.
100%. Yeah, I totally agree. And yeah, it's a very interesting space. And I mean, we'll see what happens. Cost of construction, and there's all sorts of things that we could talk about, like modular stuff and all that kind of stuff. But I won't open that can of worms, because as a developer, you know, I'm going to know what you're going to say about that. But look, Marie, I really appreciate your time. The way we usually wrap up these podcasts is I ask for one bit of advice that
Yep.
you can leave for our audience.
Yep.
Can be around development, business, anything that you want, and then a quote you live your life by.
Oh, okay.
Yeah, you can take a bit of time to think if you.
Well, the quote I live my life by is, never wish life was easier, wish you were better. So I'm always in a place of constant learning and evolution. I've been like that all my life. So, you know, I was lucky enough to have parents that used to get me to set goals and things when I was very young. And, you know, I've been around a lot of personal development and just really, you know, just building on myself. You know, every day I walk the dog, sauna, my husband ice baths. Like we take great care about this. This is probably number one. I think most people think it's the development is just something I do.
Mm-hmm.
Who I am is probably more important than what I do. You know, that's probably key to me. And I would say did you say a piece of advice for somebody starting in development,
or just
in general?
So you can tailor that how you wish.
Yeah, absolutely. Look, I think if I'm talking about development and property specific,
Mm-hmm.
I think really understanding feasibility and function of finance, and we spoke about that at the beginning, is key, because it will help you unlock what you don't already know. And I think having a conversation with somebody like yourself or other people in the industry to help people understand what that looks like is what most people just don't understand right now. And I think you know, if you can get on top of that, it's an amazing thing. But you know, like anything, I think find the right people that you want to be around and partner with them and link arms and get on with it.
That's true. Well, look, Marie Doyle, thank you so much for joining us on the Everything Property Podcast. I really
Pleasure.
appreciate it. And I'm keen to see what's next. A few of these next projects,
Absolutely.
to the branding, the launches and all that kind of stuff. Really appreciate you joining me on here today.
Absolutely. Thanks, David, for having me.